Hi, I'm Jason Scott, and I'm a mortgage broker with TMG, the Mortgage Group. And one of the things I want to talk about is first versus second mortgages. What the heck does that mean? So what it refers to is the order that the loan or the mortgage is registered on the title of the property. So you buy a house, you get a mortgage to buy that house. That's the first mortgage because it was the first thing registered. Okay, so when you sell the house, it gets paid off first and you get what's left over. A second mortgage is, you guessed it, the mortgage that comes onto title after the first mortgage. So it's in second position. And typically a second mortgage will have a higher interest rate, or at least traditionally it does, because you're probably getting what's called a private mortgage. Although private mortgages can be in first position too, but for our purposes, we'll say it's second. So when might a person want a second mortgage? And I guess we should talk about why would the interest rate be higher on a second mortgage? It's higher because from the lender's perspective, it's riskier. If for some reason you stopped paying the mortgage on the first mortgage, you stopped making your payments, and that property went into foreclosure and the property gets sold, the first lender gets paid out first, the second guy gets paid out afterwards, and there may or may not be enough money to get paid out in full, so therefore the higher interest rate. Now, when would you as a homeowner want a second mortgage? Well, let's say you bought your home in 2021, and you've got the smoking good interest rate, it's like 2% for 5 years, but you want to renovate your house. You don't want to refinance that mortgage because you're going to lose your interest rate, and it might be good for another year or two, right? So let's say you need $30,000 or $40,000 to redo your kitchen. You would borrow that money, assuming that there's enough equity in the property that the second lender would feel safe in terms of giving you a mortgage. Then they would lend you, typically if it's a private mortgage, up to 75% of the value. If you happen to have a lender where, it's a monoline lender or a traditional lender where they'll allow you to have a second component, it might be a lower interest rate, but you could go up to 80% of the value of the home. Anyways, long story short, you get your kitchen renovation done. Now your mortgage is coming up for renewal. What you could do is refinance, get a whole brand new first mortgage, pay off that second mortgage, and get rid of the high interest rate, and away you go. And now you can have people over for dinner and feel good about your house. Anyways, if you want to do that, give me a call. Jason Scott, TMG, the Mortgage Group. You can find me online at edmontonmortgagebroker.com, and my phone number is 780-720-2490.